Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Swaraj engines, which is down more than 50-60%, and let's understand about their business and whether you should invest in this stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Swaraj engines, here's a small request that kindly support me through Patreon, and once you do that, I'll make better videos on YouTube. And on Patreon, there are a number of articles that I have published with respect to markets, with respect to stock calls for short term and long term. So you can go ahead and have look at that. The support begins at only $2 a month. That's 140 rupees a month. So once I get more than 100 patrons, I'll start with a dedicated you can say videos of a course on investments and trading for no additional cost on YouTube. Now about the company, Swaraj Engines was established in 1985, and they provide engines and components for tractors. It is a top brand in this segment, and one of the leading brands with only one other listed company in the segment. Top management and strong pedigree the company has. It is a niche player, and it is an Indian agri story. So when I talked about UPL, I talked about other Bayer Crop Sciences, other agrochemical companies, Escorts. So this one also fits the bill of that. And so if you want to play the agri space, and you can say the agri up move, if you think that could come in the next 4 or 5 years, Swaraj Engines is the stock to be in. The market cap of the company is around 1100 crores at the moment, and the stock has fallen a lot from the peak of 2-3 years back. If you look at the financials of the company, then we had a fall in sales of around 14%, and the profit has fallen by around 25-26%. And this is with respect to the current scenario of growth that is taking place in India, that the growth has fallen from around 6-6.5% a couple of years back to around 4-4.5% now. And it is the you can say the rural economy that has been hurt the most. And with what has happened recently in the last couple of months with respect to the externalities that we are facing globally, and the pressures on the you can business front, this is going to hurt the agricultural economy even more, with the migrant labor going back to their places and everything else. We are seeing in a lot of news bulletins and across the board that there could be a lot of problems with respect to the agricultural season, the summer season, etc. So maybe, just maybe, this sector would be even more hurt in the next 1 quarter. It is a completely debt-free company, and the return ratios are pretty robust. So return on equity is 29%. The operating profit margin is quite decent at around 12%. So if you look at the performance of the stock is down around 65% in the last 1 year. And although the numbers have been fine, I mean, yes, they are in losses. I mean, the profits have gone down, and it has gone down appreciably. But if you look at other companies and this sector as a whole, to go down by around 20-25% is not very bad, because there are companies that are down 50-60% in terms of profitability in the agrochemical and agricultural space. The sector itself has not been doing that well over the last 3-4 years, and that has really hurt the some of the companies. And Swaraj Engines has stood tall in this real big you can say downturn. And yes, we believe that after all this settles down with respect to the illness and everything, the viruses, over the next 6 months, this company could come out trumps and could do really well, because the return ratios are good. So whenever the business comes back into focus, the return on equity, the profit margins, etc., will take the profitability upwards. There's a strong dividend yield of over 4% that comes with it. It gives a very good dividend. The dividend payout history is very good of such a small cap company, and has been an underperformer for the past 2 years. As I mentioned, that the stock is down and out for the time being. So why I believe it is you can say buy on decline. The market leader in its space of whichever products that it provides with respect to engines and other products of tractors, it is one of the market leaders and perhaps the best, and it will gain more market share with this downturn, because many of the smaller players or unlisted players, unorganized players would go out of business. The current scenario is akin to what has happened during the demonetization phase, and many of the smaller businesses which used to do business through cash, and those you can say unorganized sector did not do well, and many just left were put out of business. And similar thing could happen, and that is the travesty of the business world of the economics, that whenever such kind of epidemic happens, a lot of damage takes place on the economy, and the similar would happen on the agricultural and the rural economy. But I think Swaraj engines would stand tall amidst all this crisis, and it would gain better mileage and more market share. It is a rare agri auto firm which is into engines, so they are not into, you can say, providing, you can say, large vehicles or machinery, or for that matter tractors, but they also provide engines and other products of the tractors which are used in other brands like Mahindra, etc. Will outperform as rural economy will recover. So it would recover 2 3 years down the line. So if you have a long term view, these are very attractive levels to get into. The recovery in tractors which has happened in escorts is also a positive for Swaraj engines, and that gives you a small ray of hope that the sector itself would be bottoming out. And if not for the event that has taken place over the last 2 months, this sector would have been up and running by now. So probably in a year's time, you'll see even the tractors and the rural business do well. Attractive valuations currently at 15 16 times earnings is very attractive at the moment. Usually it used to trade at something like 25 to 28 times earnings. Currently valued at only 1.4 times sales. So the amount of sales that they are doing, although the sales would fall in the next couple of quarters, but yet on the current sales numbers, it is trading at only 1.5 times sales numbers. If you look at the technicals of the stock, there is strong support between the 850 880 levels, and the long term support lies around 760. So between 750 to 880 are very good levels to get into the stock. I know the stock has gone up a bit, but on any declines to these levels or closer to 1000 levels would be very good to buy at. 200 DMA is around 1170 rupees. The stock is currently in bear grip, as has been the overall market. So you can take a stop loss of 770 and trade into the stock, or you can buy big above 980,000 rupees and then take a stop loss at 880 and just trade into it. So a long term stop loss could be around 770 rupees, and you can buy big around 1000 rupees level. You can see further down side into the stock because of what has been happening with the rural economy and what has been happening with everything that has been happening with the agricultural sector at the moment. It's going to suffer a lot, so you can say a bit of downside, so be careful while you trade into the stock. So basic point is you can buy on major declines and keep track of numbers and have a good 5 7 year time frame, and this can give you very good consistent 18 20% return if you see after 5 6 years down the line, and keep only 5% into your portfolio. So this was my video on Swaraj engines. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.